some neon paints. There's some
Yeah.
non-removable neon paints.
We do that all the time.
Good afternoon. This is the Property and Casualty Insurance Committee meeting of our annual meeting here on November 17, 2023. There's no need for a roll call. I will mark everyone's attendance. All right. I'm Representative Edmund Jordan, and I will be chairing this committee today. I'll ask for a motion to waive the quorum requirement. Can I get a second? It's been probably moved to second. All in favor? Opposed? All right. And now I ask for a motion to approve the July 22nd, 2023 and September 22nd, 2023 committee meeting minutes. And I'll entertain a second. All in favor? Opposed? All right. Before we get started, just a quick reminder, Will has set out for us today. Anyone in the audience who is not scheduled to speak on an issue can fill out a testimony slip, which can be found on the speaker's table, stating who they're representing and what their position is on any issue. And after completing the slip, you can submit the slip to me or whoever is in the staffing here with the committee, and it will be incorporated into the minutes of the next meeting. All right. First on our agenda is a continued discussion of the in-coil catalytic converter theft prevention model act, a model which I'm co-sponsoring with my good friend, Texas Representative and in-coil Vice President Tom Oliverson. You can view that model on page 289 of your binders and on the website and the app. We've been discussing this this model since our spring meeting in March, and while we have been having some productive discussions, there have been some concerns raised by some that this model is somewhat outside the scope of the committee's normal work. I understand that it can be argued that there is a downstream insurance consequence to stolen catalytic converters, but I think you can say that about anything that's stolen, and this model kind of deals with some criminal provisions. Accordingly, after we hear from our speakers today, I'd like to hear any thoughts or comments from my colleagues as to whether they believe that this committee should keep on pursuing this development of this model into the next year. And so with us today, we have Eric DeCampos of the National Insurance Crime Bureau and Todd Foreman of the Institute of Scrap Recycling Industries. We'll hold all our questions to the end when they're finished, and we'll start with Eric.
Thank you, Mr. Chair. My name is Eric DeCampos, and I represent the National Insurance Crime Bureau. NICB is a nonprofit organization that works with member insurance companies and state and local law enforcement to detect, prevent, and deter insurance crimes. And today I'll just be following up with our presentations that we made over the spring and summer meetings with just some additional information and a quick update. So again, we're talking about catalytic converters. These are the exhaust emission control devices underneath your vehicles that since 2019, we've seen a surge in thefts of these devices, largely due to the rising prices of precious metals that make up these devices, rhodium, platinum, and palladium. And since 2020, we've seen an explosion of thefts where we had 16 in 2020 all the way, and that rose to over 50,000 in 2021. Then we saw another spike in 2022 with up to 64,000 catalytic converter thefts. And this coincides with the prices of these precious metals peaking in 2021. So I'm just going to dive right into the impact to the industry. And I believe there's a direct impact, and that direct impact is cost, high costs. Specifically, the costs associated with replacing these stolen catalytic converters on automobiles, as well as the repair costs for incidental damage done. Thieves are not exactly surgeons when they're ripping these catalytic converters off from your vehicles. They're not precise. They often cause a lot of damage that doesn't just equate to a $200 or $300 catalytic converter being sold on the secondary market. It could result in thousands of dollars in repairs to that vehicle. So let's take an example. So there's one insurance company that paid almost $4.5 million in catalytic converter claims in 2019. So this is the start of the crisis in 2019. Now we fast forward to 2021, they paid out $73 million. That's a massive jump. And then if we fast forward again to 2022, that spikes again to $112 million. That is, once again, a direct impact on the bottom line of the industry. Now, of course, there's a consumer impact as well, from financial impact due to repair costs and economic losses, as well as the public safety impact from riding around in a damaged vehicle, as well as the risk of injury or death from being at the wrong place at the wrong time and stumbling into an active catalytic converter theft. In fact, there's no more famous case, I'd argue, than the off-duty Harris County Sheriff's deputy who lost his life. He was murdered by 3 thieves who were trying to steal his catalytic converter from his vehicle. So, since then, states have been overwhelming in their response to tackle this issue, to tackle this crisis. And as you can see, since 2020, we've seen a significant amount of legislation introduced, with it peaking in 2022 at 123. And as of today, peaking in 2022. As of today in 2023, we have 99 bills that have been introduced and 25 of them enacted. But what I really want to focus on is this map. And what this map really shows is the variation that we get across states. So we have states that have enacted some comprehensive legislation that have tackled a number of provisions, from establishing catalytic converter theft as a crime, record-keeping requirements, buyer and seller limitations. But then we have other states that have taken a more incremental approach and maybe adopted 1 or 2 of these provisions. And so again, there's a lot of variation. And the solution to this, in my opinion, is through this model legislation that we have on the table, to establish a model that will establish that floor for states and those tools for states to use to help combat catalytic converter thefts and the impact that it has not only on consumers but on the insurance industry. And so this model contains the following provisions. Criminal statutes, yes, that's just a part of it, but there's also buyer limitations, for example, making sure that transactions involving used attached catalytic converters are taking place at fixed business locations. There's seller restrictions, such as ensuring that that sellers need to be licensed and regulated entities that would come across these devices over the normal course of their business. And then finally, a voluntary state VIN etching grant program. And what I mean by that is aftermarket voluntary programs where I can take in my vehicle to a local police department or another eligible entity, have them etch a serial number or a VIN number or some sort of marking, which will then be used as a deterrent against these criminals, because it's much harder to sell a catalytic converter if there's a tracking number on it, or there's a serial number that law enforcement can use to track these devices. And this grant program is designed to provide these local jurisdictions with some funding in order to hold these VIN etching events, and it is funded entirely on enforcement actions such as fines for noncompliance with state catalytic converter laws. Now I'm going to wrap up this presentation by focusing on 2 success stories. In June 2022, Hawaii enacted Senate Bill 2279. This was their catalytic converter theft bill. As of halfway through 2023, Honolulu Police Department reported 119 catalytic converter thefts. And you can compare that to 1,600 in 2022 and 2,000 in 2021. It made a difference. And now if we look at it from the insurer perspective, State Farm recently announced a drastic reduction in catalytic converter theft claims and the money that they paid out as a result of these claims. In the first 6 months of 2022, State Farm paid out $50 million over 23,500 catalytic converter theft claims. During that same span, the first 6 months of 2023, that number decreased to just over $41 million over 14,500 claims. And they directly attributed this significant decrease to state legislation, law enforcement efforts, media coverage, which is shining light on the issue, and declining metals prices. And I think what this is indicative of is that state legislation is making a difference. It's having a positive impact in tackling this crisis. And we shouldn't be taking our foot off the gas. We should move forward with model legislation that'll give the states the tools that they need to enact legislation that they don't already have in the books in order to help fight this crisis and continue to drive down theft rates. And yes, it's true that metals prices are declining. They've been declining since the end of 2021. But that's just temporary. Markets are cyclical. Prices are low today, but they'll be high tomorrow. And the incentive to steal these catalytic converters will be there. The incentive to potentially even attack consumers, to drive up these catalytic converter theft claims for insurers, that'll all be there. And so this model not only will help tackle the issue today, but it will provide the tools and the guardrails necessary to tackle the issue in the future as well. And with that, thank you very much for your time, and I'm happy to answer any questions.
All right, we'll hold them to the end. Mr. Foreman.
Yes, I'm Todd Foreman. I work for the Institute of Scrap Recycling Industries. I am the Director of Law Enforcement Outreach. And we use the title ISRI, so I'll probably continue to use that from this point on. But ISRI is a trade association for recyclers. So I represent the recyclers. We have about 1,600 member companies in the United States. So as I represent them, we like to help draft legislation. We like to help get the legislation out there because it is important to us to make sure that the recyclers aren't buying stolen materials and the materials aren't being stolen, because as well as buying the materials, they're sometimes victims of the crime. I retired as the chief of police about 2 years ago when I came to work for ISRI, so I've been working within the theft area of catalytic converters and other things since my career started. But the price, Eric is exactly right. The prices, they were about $300 at the height of the crimes. Average price for a catalytic converter was about $300. At this point, the average price is about $100 per catalytic converter. That means there's highs and lows above them, but the price is greatly reduced. The prices of the metals in them are still above the price of gold. Some of the rhodium, platinum, palladium. Rhodium is the most valuable of the three. They take these, and these are strategic metals. So these strategic metals are strategic for the United States to keep in the United States, and they're used in many ways, and they're listed as strategic metals by the federal government. We would like to continue to work with this organization to help with the model legislation because we believe it's important. Now, I don't think we need to make a new bill because, as you saw, every state except for one has legislation on catalytic converters. So the legislation's already there, but they all don't meet the standards that we're looking for. They all don't help stop the theft. Some of them are better than others, as Eric was stating. Some of them, some areas that we were stating has slowed down the theft, as Hawaii has, and there are some other states that have really good laws. Tennessee, North Carolina's law is good. South Carolina's is good. We've worked with those states, and they still need some work to meet the standards. But you're writing you have got the standards in it that we're looking for. We need to limit who's able to sell them. We need to limit who's able to send them through the mail, those type of things. So I would be for you continuing to work on this, and I can answer questions as far from the law enforcement perspective and from the industry perspective.
Thank you, Mr. Foreman. Do we have any questions from any of our legislators? All right.
Thank you, Mr. Chair. I think you began this by asking, do we continue to proceed? And with all due respect to what I'm hearing here, and I don't disagree with anything you've said. What I'm looking at, though, a little bit is just kind of from the institutional of the incoil is we're getting into an area of criminal code, and what do we do with people who steal things? And I look back to think, have we ever done anything in that vein? And the answer is no, that's not really what we do. And when you said there's already legislation already there, it just needs to be changed and tweaked. I guess I would encourage us to go back to our states, because I kind of looked at this and thought, if this bill was brought in Indiana, I don't think it would go through the insurance committee. It would go to courts or criminal code or civil. I mean, it would not go to insurance. And so I just don't want to kind of get outside of our lane of being focused on insurance. And I know that's a big issue right now because of the theft, but I think personally, I just think it's an issue that I'm glad it's been brought forth, and thank you for the information. I will go back to Indiana and see how strong our laws are on some of this, because I do agree that we may need to enhance some of those things when it comes to even the etching. But I don't know that it's necessarily an equal model, but that's my opinion. So thank you, Mr. Chairman.
Thank you, Representative Lehman. Representative Carter.
Thank you, Mr. Chair. And along those same lines, I do want to know if there are other considerations that you may have, since this does not fall up under the purview of Department of Insurance and Financial Services for the state of Michigan, that red state on that map. And also, what kind of benefits would it be for our fraud investigation unit, since this is something that could help us curb fraud in our state?
So the benefits to your fraud bureaus is ultimately by having these deterrents in place, by having these guardrails in place, it provides items like paper trails for your fraud bureaus as well as your local law enforcement jurisdictions in order to track down either criminal organizations or those opportunistic individual thieves that are trying to sell these catalytic converters. And that's really the crux of it, is to provide the assistance to your law enforcement entities or to your investigative authorities to be able to hopefully recover those devices, or if not, then to at least tackle the elements, the criminal elements that are perpetrating these crimes, which ultimately the impact is not just on the consumer, but also on the insurance industry as well. So this definitely falls under the purview of your fraud bureaus, who are indeed being forced to deal with this issue due to the sheer amount of theft impacting auto claims associated with catalytic converters.
Follow-up, please. Okay, so going back to the model itself, how would this benefit states that don't have this model in place? In other words, I'm agreeing to the fact that this does not fall up under the purview of the Department of Insurance and Financial Services. And there is a program in Lansing, Michigan right now where we're working in collaboration with you and Shaheen Chevrolet out of Lansing. So I just want to make sure that we are covering all bases here and getting every opportunity to curb this epidemic.
I would go ahead and answer that. All the states would benefit from the model legislation because it gives the points that we need to really have in the laws. If we don't have those points in the laws, it doesn't benefit law enforcement. One of the big things that I've been pushing with through ISRI is possession of the detached catalytic converters. Not everybody should have possession of a detached catalytic converter unless they have proof of ownership or they're licensed to be in the business. And that's where the challenge is. We want that in the law so that we can have the right people having possession. And it helps law enforcement because while I was working and while my colleagues were working through the years, we could stop a car with 10 catalytic converters in the car. We weren't able to attach it to anything else, and we couldn't do anything to them because there was no laws about having that possession.
If I may also add, Mr. Foreman brought up a really good point during his presentation, and what we're talking about here is creating standards, a basic standards that all states can look up to in order to shore up their laws addressing this issue. And right now there's gaps when we look at all 50 states. Not all state statutes are living up to these standards. And what a model can do is establish what those standards are and then allow states to pick and choose to amend their statutes in order to get up to that level needed to actually create the deterrent necessary in order to deter criminals, but also the regulation necessary to regulate these devices. So I really think that's a big takeaway when it comes to this issue. Yes, criminal penalties, I understand reservations around that, but that's just a small part of it. We need to look at it holistically in the form of standards that states can look to.
Delegate Westfall.
Thank you, Mr. Chair. I don't have a question, just a comment. I think we need to continue this. Been an insurance agent a long time, 43 years. We used to have theft car rings, or rings people would go around stealing cars, basically trucks in West Virginia. Now we've got the rings stealing catalytic converters. And we do have legislation enforced, but it's not deterring the theft of them because you, like the gentleman said, you can have 10 in the back of your car and so what? I'm just, so I think we need to do this. I think it'll be better. It'll help insurance rates. They do a lot of damage when they take them off, and you have the expense insurance-wise of a car rental, and then these are comp claims, and I'm for this, and I'm planning to run some version of this in West Virginia next year, hopefully what we have right here. So, thank you, sir.
No problem. Look, I will say this. I certainly agree with the co-sponsored for the purposes of discussion, but I share some of the same concerns as Representative Carter and Lehman from the perspective of I'm not sure how this differs from arson or really just any regular auto theft. I think the legislation in itself is purpose. It has purpose and it's well-meaning, but really, does it fall under the purview of the insurance committee? I think in most states this would probably fall under some criminal justice or some similar committee. So I think that really is the real question of where it belongs. Does it belong here at NCOIL, dealing with insurance, or does it really go into the realm of criminal justice in one of those committees? So, again, I just don't know if we want to open Pandora's box to that, opening ourselves up to all of that. But that being said, do we have any other questions? Sarge.
Thank you, Mr. Chair. Now, we passed a law back in 2017 directing this, and I think more importantly, this model is bringing attention to the cause of what's going on in support of our insurance companies, and then also making sure that the laws, or the part of the law, justice part of it is just a sense of support, more or less, if we stand behind with some type of model. And I'm like my colleague from West Virginia, we're looking at doing some things and upgrade that law we passed in 2017 again to consider that support of this need that's going on that our insurance industry is looking at and handling. And then again, providing that support when there is justice to come up and to handle the situation. Thank you.
And look, I think everyone here supports the legislation. I just think we're thinking about where it actually belongs. So, Representative Lambton.
Yes, thank you. A real quick story, true story that occurred in my district. This is a big problem. I have a friend who owns a store in Locke Place, and the thieves were coming in through the bike path. They cut a hole in the fence. They were carrying backpacks full of catalytic converters that they just cut out of several motorhomes that were stored there. And the he told them the only thing the sheriff could do was get them for criminal trespassing, even though they had 3 or 4 catalytic converters on their possession. So I think that's why this is important, that standards are developed. Everybody knows a stolen car is a theft, and there's laws for it. We need to define this and get this set up so that having 10 catalytic converters on you is a criminal offense as part of this. And I also know that having an NCOIL model will greatly assist any of us who are trying to pass legislation in our respective states. It gives it more power and more position. But you're right, and I agree with Lehman that it won't be in the insurance committees. It'll be in the criminal justice or those type of committees. But I think this is something we definitely, because it benefits clearly by his statement. It'll benefit all of our insurance and our constituents. Thank you.
All right. If we don't have any other discussion on it, this is something that we're certainly going to discuss in our interim meeting and decide whether we want to continue to move forward or not. Thank you, gentlemen. All right. Next on our agenda is a discussion of the proposed amendments to the NCOIL Model State Uniform Building Code, which is sponsored by Representative Dunnigan. I think Representative Dunnigan has stepped out of the room for a minute. But we'll go ahead and start today with Tom Travis, my good friend with the Louisiana Insurance Department, who will tell us about the great work that we're doing in Louisiana. Oh, there's Representative Dunnigan, right on cue. So we'll turn it over to Representative Dunnigan, and then we'll come to you, Tom.
Thank you, Mr. Chairman. As I noted in our interim meeting in September, I'm very interested in developing a policy for states to follow that would incentivize homeowners and renters to take steps to strengthen their residences from natural disasters. In my home state of Utah, we've been dealing with some really horrific wildfires over the last couple of years, so I'm very interested in the public policy that ultimately aims to strengthen homes and neighborhoods. One of the challenges I find in my state is people don't want to make many changes to their structure, but they want their fire insurance policy to cover it at preferred rates when they live in a mountainous area and it's challenging. So initially, we started with amendments to our existing building code model that were modeled after the Oklahoma law that would require the insurers to offer a premium discount if certain standards were met in regard to strengthening their homes. And you can see that language on page 250 if you're interested. However, as I studied it, I was not convinced that that would really move the needle, so I'm withdrawing those amendments and looking to develop something new. And I'll give you an example. Let's say that you're considering to replace a roof that's going to cost $20,000, $30,000, and your homeowner's insurance, your fire insurance is $4,000 a year. They give you a 10% discount. You'll save $400, but it's probably not going to motivate you to put on a $20,000 roof. So today I'm looking forward to hear from our invited speaker from Louisiana to learn about what they've done and see if it's something that NCOIA should consider. I'm very committed to this overall issue of strengthening homes from natural disasters and encourage and invite your comments and submission of policy so we can get the right mix. Thank you, Mr. Chairman.
Thank you, Representative. All right, Tom, now we're back to you, and we can talk about what we've been doing in Louisiana. And you can see that bill that was sponsored by Representative Huval, who is our current insurance chair, on page 260 and 261.
Okay. All right. Well, I'm happy to be here, Mr. Chairman, and talk about our program. It's just gotten underway. We have kind of an origin story in Alabama. They have their Strength in Alabama Homes program, which we borrowed heavily from to design our program and to do our regulation and set our grant amount. And we've consulted with them a lot on their processes, the forms they use. Also, we've talked to their IT people at the University of Alabama, and we developed our IT system from that. There are also other states that have mitigation programs. South Carolina has one of their legislations very similar to Alabama. And then, of course, the fortified home program, the fortified roof in particular, which our grant program uses or is based on, from the Insurance Institute for Business and Home Safety, or IBHS. And they've developed a comprehensive wind mitigation. They're now working on wildfire mitigation. They've created a wildfire designation program, which I think is being rolled out in California right now. And then, of course, Smart Home America, which is a nonprofit. It's kind of an advocacy group that's sponsored by IBHS, and we've worked with them heavily in developing our processes. Our statute provides for grants to retrofit existing homes with fortified roofs to the IBHS fortified roof standard, which is a fairly comprehensive technical standard. And once you get that, you will get discounts that are provided for, or that the insurance companies have to file with us according to our statute. Also, the program requires that the homeowner have a homestead exemption. This is like Alabama. We are able to verify that that's a primary residence. A lot of people have rental properties that they're trying to get into the program, and this keeps it to the primary residence. And it's something we can legally verify, and we can go to the assessor and tax commission records online and verify that very quickly. For our regulation, we have the grantees. They are required to have residential insurance. That could be a homeowner's policy, a dwelling policy, or some other type of a similar policy. But it must have wind coverage. Now, what we have a lot of are people who have citizens, our residual market, wind-only policies. and are wind and hail only policies. And that qualifies as well. We also require flood insurance for those that are in a special flood hazard area. And it's first come or first to apply. So if we have an online system, we open it up, and you have to be online, and you have to get in, and you fill out the application. And if you're not in that first 500 or 1,000 or whatever number we set, then once it fills up, you're not allowed to complete the application. And we do that for a variety of reasons. One is so we don't have a lot of personal information of people that we're not going to be giving grants to. And also, we have evaluators in the program, and these are people who are IBHS approved. They're usually people who are building inspectors. I have one on our list is an architect. Sometimes they're claims adjusters. There's one claims adjusting firm that has a nationwide relationship with IBHS. And they're the people who start the process. They work through it. They determine if the building is able to be upgraded to the standard. There are various technical requirements that they have to meet. Also, they go through training on hurricane, IBHS hurricane training and high wind and hail training, and so that they know what the different standards are for the different zones. If you're on the coast, you have the hurricane standard that you have to meet, and if you're farther north, you meet the high wind and hail. And then we have ethics rules in our regulation for the evaluators. And but the primary there is that you can't be an evaluator and be a contractor or a roofer in the program. And the same is true for the contractors. And that prevents someone from going and evaluating someone's business, and then another contractor who's also an evaluator, evaluating that person's business. So that it keeps people from developing too close a relationship. And that was something that Alabama had added to their regulation last year before we did our regulation. And then, of course, you have the roofers and contractors, and they have to complete the hurricane and high wind and hail certificates from IBHS for the appropriate for their trade. Roofers, there's a roofer certificate, and then a professional certificate, which is a general contractor. Most of the people we have are registered with us as roofers and have the roofer license or registration with the contractor board. And that's the next requirement is license or registration. And then, of course, they have to have certain insurance coverage, and I think it's $1 million of CGL coverage, and then they have to have workers' comp coverage. And that's a requirement that IBHS has for the people on the IBHS approved list. And as I said earlier, they have the same ethics rules as the evaluators. And then our grant application process is online only. So you get on and you have to do everything online. Some people have a little difficulty with it, but we have a pretty simple, once you hit the apply button and get in, the application is very simple. So it's not very difficult to get past that once you get in. The process is homeowner driven, so we do have a list of approved evaluators and approved contractors, but we don't tell the homeowners that you must use this contractor or this evaluator. And so they have to, every step of the way, they have to make the decisions. And we try to keep a light touch on those decisions. It's overseen by our staff. We have 3 or 4 people, administrative staff, who review the applications for completeness and make sure that they meet all the requirements. We check the insurance documents and make sure that everything's straight, and we check the homestead exemptions and the flood zones. And as reports come in, the pre-site inspection report from the evaluators, which is how we determine their eligibility to move forward, that they have a home that has an adequate foundation and it's in good repair. That's reviewed by our staff. There is an internal, lessons learned, there's an internal administration burden. It does take time to go through all this, and we're in the middle of doing a total of 3,000 grants in just a few months. Alabama has been doing 1,000 grants a year, and they've spaced theirs out a little bit further. But we were given a lot of money, and we wanted to get people in the program and start doing roofs before the next hurricane season, and have them completed before the next hurricane season. So that's something that, if you're thinking about doing one of these programs, you have to think about the internal administration. We can validate homestead exemption and flood zones online. When you review insurance documents, that takes time because you have to get them uploaded from the policyholders and the homeowners, and then you have to go through them. And if you're not familiar with reviewing insurance documents, it can take a little time, or even they vary from company to company, and so making sure that they have wind coverage is sometimes a little difficult. You have to start reading the fine print, even in the deck page. And then one thing, learning curves are steep for everyone, myself included. I'm not a contractor, I'm a lawyer by trade. And the administrative staff, they don't really have much, they don't have any contracting background. A couple of them have actually gone through some of the online training though, and have learned a great deal. And so they're pretty impressive body of knowledge that they've absorbed. And as we work through this, we're learning a great deal. We also have a contractor and evaluator workforce, many of whom are fairly new to the process. Even though they've completed the certificates, they've met the IBHS approval requirements. Some of them have done a few fortified roofs, and there's some of them who've maybe done one or two, and maybe haven't even done one yet. So we do provide a fair amount of oversight through our pre-inspection, our pre-site inspection process. And then we have a bid review process that we adopted from Alabama. We have a standard bid sheet for the contractors. And part of that's to make sure that they are addressing the issues that have been raised by the evaluators. And so they're all kind of learning how to do that. And we, this afternoon, I didn't make the meeting, but we have a Zoom meeting at 1 o'clock Central Time. And our people got online with the IBHS and our contractors and evaluators. And they ask questions, how do I deal with this problem? There's certain standards, but we have a lot of peculiarities of construction. And so that's one of the things that we've been dealing with. And it's, our staff is new, like I said, new to construction terminology and the administrative requirements, but they've learned pretty fast. And then, of course, every area of the country has peculiarities of construction. The example of the dry stack foundation, that's people who have bricks or blocks that are stacked up without any mortar or cement between the bricks, and that's what they have their house on. That doesn't, you can't put a fortified roof on a house that is likely to get blown over. They won't certify it. And there are certain things in the New Orleans area. There's something called a ridge tile, and it's something I'd never noticed, but if you drive through New Orleans, you'll see a lot of houses that have tiles along the ridges of a shingle roof. And they won't certify those as fortified, so people who have those have to have them taken off because IBHS hasn't figured out a way to test and certify a ridge tile. But those in other areas of the country, I'm sure, have their own peculiar construction issues, and that's the kind of thing you have to watch out for. And then one important lesson, we've benefited from a relationship with IBHS and Smart Home America, and they've been very involved in Louisiana for the last several years. They've been pushing this in the building trade groups in the New Orleans area and with the insurance groups, even before we were doing this grant program. And so they'd laid the groundwork, and we have a large workforce of contractors who've been approved. We have 111 contractors that have met all the approval requirements. We have 30 or so evaluators, and the evaluators have their own workforce that goes out and does the legwork for them. But to compare that, Alabama's been doing this for several years. They have 14 or 15 evaluators, and they have 26, they may be up to 30 contractors. I talked with an Alabama contractor this afternoon, and who wants to sign up for our program as well. So we've managed to get a lot of people, so as we're moving them through, there's plenty of competition out there to keep the prices down on the roofs. And it has had an effect on the bids that have been coming in. Anyway, these groups have supported developing our process and our forms, the pre-site inspections and the bid sheet, which we borrowed heavily from Alabama, but we have changed both of them to address issues that are peculiar to Louisiana. And like I said, this afternoon we had our office hours type meeting, so it's a question and answer session, and we put out information to the participants. We also have a dedicated IBHS email for questions for our program. So if someone's participating in our program, they can use the Fortify LA Homes at fortifiedhome.zendesk.com, and it goes into a priority mailbox at IBHS, and they get a fairly speedy response, usually within a day. And then recommendations for those who might want to establish a program like this. The first is to establish the relationships. IBHS and Smart Home America, they have lots of resources, including, they have demonstrations at their site. They've done visits for Alabama legislators, and I got to go to one of those along with the chairman and another member of our insurance committee and some of our staff, and we got to learn about the Alabama program in depth, and we also got to see a lot of all the research and the testing that goes into the various fortified roof elements. I mean, they have a farm out there where they age shingles, and they've been out there for years, and they'll bring a panel of them in there, and they'll have an ice gun, and they'll shoot hail balls at it, and steel balls. They do all kinds of things like that to test that. They have a wind tunnel for testing, the ability to withstand high winds. Also, we have established relationships with other states' mitigation programs, particularly the Alabama program, but we've talked to people in the other programs as well, and we got a lot of knowledge there, and learned from some of their mistakes. One of them, I don't know, although Alabama continues to do it, they do their applications. They open up at midnight to take applications. We were told, of course, older people don't stay up to midnight, and a lot of people, it's not convenient. So we open at noon, and so that more people can be up and at their computers in order to, and be online to do that, and won't sleep through the application period. Also, you need to work with the various construction and housing and insurance sectors within the state, and that includes like our Uniform Construction Code Council, but also the home builders and the various insurance agent groups. Also, you need to identify the resources that are required. The fiscal, you got to figure out how you're going to fund the operating of this if you're going to sustain it long term, because it's going to require people and administrative expense. Also, grant funding. Alabama has a dedicated fee that I believe it's on their insurance producers, and that goes into a fund, and that's how they manage their grants. We have not created we have a fund, but we do not have a dedicated funding source. We got a $20 million appropriation this year, along with another $10 million that's appropriated from the money that we collect for our fees and revert to the general fund. And we're allowed to keep 10 million of that, or up to 10 million of that, for the grant program. So we'll have about $30 million, which at up to $10,000 a grant is 3,000 grants. But you're going to do personnel. You need to think about job descriptions, whether they should be employees or contractors, and what skill sets that you would need. Also, you need to think about the IT support, because you need to start planning that early. We spent almost a year working on our IT system, and there's still a lot we would like to add to it, and things that we've learned since launching the program that we would like to add, that we think that we need, changes we definitely know we need to make, and that we would like to do. And the last one is communicate. There's a lot of misinformation that gets spread about the program, but communicate with the evaluators and contractors. And one of the things that surprised me is the number of contractors who signed up after we launched the program. 111 we have approved now, but when we started on October 2nd, we were somewhere in the 40s or low 50s. And a lot of those are people who've applied since then. And I'm not sure why they were waiting, because we were open to receive applications for several weeks or months before the program. Also, communicate with the public. A lot of people don't necessarily understand what the program consists of. Some people just think that the government's going to come in and give them a free roof, but they do have to pay the fees for evaluators or any permits, and that evaluator fee can be $500 plus up to $700. Also, that they have to understand that they pay the excess cost of construction. So you get to 10,000, and some of these roofs are 15 or 20,000, and they have to be able to pay that. Also, other stakeholders, communicating with the legislature. They've communicating with insurance broker groups and letting them know what's going on. Also with the insurance companies, and other trade associations in your area. And then anticipate. That's another recommendation. There are problems. There are always going to be problems. I think Mike Tyson says everyone has a plan until he gets punched in the mouth. And I have been punched in the mouth. I would say there are so many things that I anticipate or did not anticipate, and so that you just have to think about every step of the way what could happen and try to figure it out. And we thought we built a lot of stuff into our system and into our processes to deal with that, but there's always going to be a problem with somebody has a special situation or complaints, and being able to know your program, know your resources, and be able to respond to those problems, those special situations. And that's my contact information. If anybody wants to learn more about this, I could probably spend an hour or two just talking about our regulation and our forms and how we do all the inspections. But anyway, that concludes. Any questions?
Thank you, Tom. We do have a question, Representative Stevenson.
Thank you so much. And thank you, gentlemen, so much for your time. I just have a question about how many contractors are participating and what has buy-in been like from them?
Well, we have 111 as of 2 days ago that were approved. I've still got another 40 applications. And I would say 8 or 10 of those just have a few things they need to get done. So that's a lot of contractors. It's a huge workforce. And like I said, Alabama, of course, their program has been very geographically limited until a year or two ago. And they were just in Baldwin and Mobile counties. But they've moved north, and they're actually in Jefferson County around Birmingham. But they still only have about 30 contractors. But the ones who are in it are very enthusiastic. Every time I talk to one of them from Alabama, they think it's a great program. They want to come to Louisiana and do the same thing.
Do we have any other questions? All right, seeing none. Again, thank you, Tom. If you have any questions in the future, you can certainly reach out to me, Representative Dunnigan, or any of the NCOIL staff. All right, before we move on to our next topic, there are some technical changes to the Building Codes Model Act that's wholly separate from the premium discount amendments that are also sponsored by Representative Dunnigan. These amendments are found on page 258 in your binders. And as you can see, they are very technical in nature and really just serve to bring the model up to date in terms of references within the model. Are there any questions or comments about those amendments on page 258? All right, hearing none, I'll entertain a motion to readopt the model with the amendments.
Second.
It's been probably moved and second. All in favor? Opposed? All right, those models are adopted. Thank you so much. The model with the amendments will be presented to the Executive Committee tomorrow for final ratification. Okay, next on our agenda is the continued discussion of the NCOIL Public Adjuster Professional Standards Reform Model Act, sponsored by Kentucky Representative Michael Meredith. You can view those on page 269 of your binders, And with that, I'll turn it over to Representative Meredith for some brief remarks.
Thank you, Chairman Jordan, members of the committee. Appreciate the opportunity to have this in front of you again. For those of you all who were at the Minneapolis meeting, we rolled this bill out, this Model Act out at that meeting and had a very robust discussion about it. This legislation is based off of what we adopted in Kentucky during our last legislative session following the severe floods and tornadoes that we had in the state. And I think we're getting pretty close to what I think is a good piece of consumer protection legislation from this Model Act. If we can get everybody's schedule to align, I would like to actually have an interim meeting of the committee before the April meeting down in Nashville, so that we can have a committee vote on this model. But from today's perspective, as far as the discussion goes, like I said, we had a very robust discussion about it back in July in Minneapolis. I think there are really two things that are still kind of being discussed back and forth on this issue, and those surround the conflict of interest provisions and the fee cap provisions that are in the bill. You'll find the fee caps on pages 284 and 285, and the conflict of interest provisions on page 283. So I hope that's what we will discuss today as we go on. I do want to recognize we do have our Commissioner of Insurance, Sharon Clark, in the room from Kentucky. She has done great work in implementing what we did in our state. So I want to recognize her and her team for their work that they did on our bill while we're here. But again, would like to move on into the discussion about fee caps and conflict of interest. From my perspective, I think both of those things are very, very important and need to remain in the Act from a consumer protection provision. But I know that's what we need to discuss as we move through the work today. Mr. Chairman.
Thank you, Representative Meredith, and welcome, Commissioner. We'll now hear from our speakers. Today we have John Schnoss with NAMIC, Cole Klein and Angela Henderson of the American Association of Public Insurance Adjusters. And again, we have Eric DeCampos of the National Insurance Crime Bureau. Again, we'll hold our questions to the end, and we'll start with John.
That was loud. Thank you, Chairman Jordan, members. John Schnautz, representing the National Association of Mutual Insurance Companies. We are a property and casualty insurance trade association. Just first, my thanks to Representative Meredith, also Representative Lehman, Delegate Westfall for their work on this. When we addressed it back at the Minneapolis, I should say we are here in support of the model today with some additional clarification, as Representative alluded to, if we can find agreement on it. When we spoke to the model back in Minneapolis, we were generally supportive of NCOIL having a model here, but had some very important clarifications we thought needed to be made. Those clarifications have been made. I can go through them if the committee would like, but otherwise I will spare you those. But our goal was to have something that every state could take back and use to strengthen its protections of consumers in these particular areas. We don't think this model is perfect. If we were writing it, we would add some other things to it, but we do think it has reached a point where it can serve the function that a good model can and should, and the perfect not being the enemy of the good, we think it should move forward as soon as the committee is ready to do that. I do want to say a couple of quick things just to add a little to what I've said so far. One of the things I want to note is most of the provisions, and I can crosswalk these if the committee wants to get really bored, most of the provisions that have been added since the summer meeting are based on provisions that already exist in Texas law, and they have existed in Texas law for 20 years. So when you hear anyone talk about the possible implications of having these in the model, that's not really a hypothetical thing, because they have been on the books for Texas in 20 years, and we know what the impacts are, and we can assess those fairly well. The final thing I would just mention to the committee, I don't remember if this came up during the earlier discussion, I do want to make NCOIL aware that NAIC is moving forward with its own set of amendments to its Public Adjuster Model Act. The two are a little different. They focus on some different things. They're generally pretty well aligned. But one point that I would make is one of the proposed changes to the NAIC model that we think is very positive is taking the existing fee cap, which has been optional in the model, and making it a real non-optional provision of the model that matches exactly with what Representative Meredith has done in his bill, and we think it's a good change. Happy to answer any questions.
Thank you, Mr. Chairman. Good afternoon again. My name is Eric DeCampos. I represent the National Insurance Crime Bureau. I will keep my remarks very short. NICB strongly supports the public adjuster model law due to the important consumer protection provisions that are within it. For example, public adjusters will be prohibited from engaging in activities that could be construed as a conflict of interest, as well as having a financial stake in business entities that obtain business in connection with an insurance claims. These consumer protections will help deter unscrupulous public adjusters from engaging in deceitful and fraudulent business practices. For example, signing up consumers for services that they do not need, that they never asked for, and in some cases have no knowledge that even occurred, such as signing up consumers for additional subcontractor work or even signing them up with a law firm without their knowledge. As the committee continues its consideration of this model law, NICB strongly urges the committee to ensure that these critical consumer protections remain unchanged, that they remain in place, because they are there specifically to help consumers from some of this predatory behavior. And with that, thank you very much again for your time.
All right, we'll move on to Mr. Klein.
Hi, my name is Cole Klein. I'm with the American Association of Public Insurance Adjusters. We are a national association that represents members all across the country that service policyholders with average and smaller size losses. We did submit some drafting notes, and if anybody has questions about those, you can feel free. I'll keep mine pretty short. They were pertaining to the drafting note that followed the fee cap, and we suggested that it be optional and with corrective language regarding some of the states having higher and lower caps, and the voiding of the contract section near the end of the draft. We suggested language which is similar. The language we suggested came from Pennsylvania, which is in law regarding home improvement contractors. So if anybody's wondering where that language came from. We also had a question regarding the section that says a public adjuster may charge a reasonable fee that does not exceed inclusive of all compensation. The public adjuster is paid on a claim, and specifically what inclusive of all compensation meant, and if that includes expenses incurred by the public adjuster on the insured's behalf to be reimbursed back to the public adjuster. Thank you.
Does that conclude your comment?
Oh, I'm sorry.
Does that conclude your comments?
It does, thank you.
All right, then we'll move on to Ms. Henderson.
That's all from us.
All right, no problem. All right, we'll open it up to legislators. Do we have any comments from any legislators? All right, Steve.
Thank you, Mr. Chair. I like the current model we have. I think it is getting better. I was hoping for a vote today, but I'm anxious to hear we possibly can vote this with a interim meeting sometime between now and April. I think it might not be possible if I thought in Minnesota or Minneapolis to be asked as a co-sponsor if it's possible. I'd like to be asked as a co-sponsor. There's only one. For two co-sponsors to be on there, I'd like to be a co-sponsor also. I plan to run some version of this in West Virginia in January. I'd like to be a co-sponsor also. So thank you.
All right, I don't think that's an issue.
Sure.
We can make that happen. Any Representative Lehman?
Yeah, I think I guess that's my signal. I've talked too much today. I'll be brief. I want to thank Representative Meredith. We've had quite a few conversations. We passed a bill, and I know, Cole, you were in my office several times. We passed a bill similar to this out of Indiana. We did not address the fee caps. And I think that's something we can have a further discussion on. But I do think what overarching all this is a good model, because it really is a protection model. And I think that, I hope we can get this to a place where we absolutely get something out so that we can get it into our general assemblies. Those of us that have already done it, but we may have to make some tweaks to ours. But I do like this model, and thank you, Representative Meredith, for your work. And I would more than happy defer to my friend from West Virginia as far as co-sponsoring. If we only allow one co-sponsor, he could take my place.
All right, do we have any other questions? If not, then, look, of course, you know, I'm sure many of you are aware that we've had something similar to this in Louisiana. I will tell you frankly, I still have some issues with it as presented. I do believe that some of the language still, as it relates to Louisiana, encroaches on the unauthorized practice of law. We have addressed some of the contingency fee issues. We do not allow for that. So we have some other issues. But again, I think as Mr. Snout said, I'm certainly not going to let the perfect be the enemy of the good. Those issues that we have in Louisiana, I think we can continue to fight those in Louisiana. And as for the other states, if it's a model that's acceptable by the majority of the group, then I think we move forward with that. But I would just note my objections that I have for the record. All right? Nothing else, we'll move on. Again, if you have any questions on this model, you can reach out to Representative Meredith, Representative Lehman, now Representative Westfall, or any of the in-call staff, and they'll be happy to help you. All right, last on our agenda is the consideration of the proposed amendments to the In-Coil Delivery Network Company Insurance Model Act, sponsored by Delegate Westfall and Kentucky Representative Michael Sarge Pollock. We discussed these amendments during our interim meeting in September, and the amendments are really just kind of clean-up amendments. So I'll now recognize Brad Nail. Is Brad here? Yep. All right, who has been leading an interested persons discussion group on this model, who can briefly summarize the amendments. And we'll go ahead, Brad. Thank you.
Thank you, Mr. Chairman. Brad Nail with Converge Public Strategies. This committee in 2022 considered and ultimately adopted the model for delivery network company insurance. Bills were introduced and passed in North Dakota and in Indiana with some changes to the minimum limit requirements, and they were introduced in a handful of other states. Through those legislative activities, some of the stakeholders saw some minor amendments that could make improvements to the model language in advance of future introductions in their states. So those changes are technical or clarifying in nature based on that experience and feedback. And Mr. Chairman, I think the materials in your meeting materials, it's fairly self-explanatory, but obviously I'm happy to answer specific questions anybody has on any of these amendments that come from the committee.
Thank you, Brad. All right, do we have any questions? Any questions? All right, if there are no questions, then I'll entertain a motion to adopt the amendments. I entertain the second. All right, it's been properly moved and second. All in favor? Opposed? All right, those amendments will be presented to the Executive Committee tomorrow for final ratification. Do we have any other business? All right, if there's no other business, before we go for the motion for adjournment, I just remind everybody that tomorrow is a casual day, as it's a travel day. And so just a reminder of that. And if that's it.
I'd like to discuss your outfit with
No, well, no, I'm going to be very casual tomorrow. So it won't be a vest and tie, I can assure you. All right, with that, I'll entertain a motion for adjournment. All right, second. All in favor? Opposed? All right, we are adjourned. Thank you.